Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 3rd of December. So we saw some really big moves early in the week because of the new variant scare that we had late last week. The markets have steadied up a little bit, but we do find some very key levels being tested now before non-farm payrolls tonight. So we'll jump straight into the charts and we'll see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD. You can see that the systematic fall has really continued on. It's trying to push down to a new low again. We're into the 70s now. You know, we know the 70 cent has been our target for a long time. It's got there very, very aggressively with no pullbacks whatsoever, really, to speak of since this level here, since it nearly touched the moving averages. And even then, that was a very shallow touch. So realistically, plenty of MACD power here. I'm still thinking that we're probably going to push lower given the price action that we've got. We've tried to test the upper boundaries twice and failed both times. Now you can see here, this has been a very, very big indecision candle. It did fail on the push down, but it is trying to attempt another break of it. I don't think it's going to happen before we get an announcement tonight. So, you know, it's probably going to be a relatively slow day with trading hovering in this area, but it doesn't mean that you can't really scalp it. It just means that you've got to have to go to a really small time frame, maybe something like the 15-minute. Look for a breakout, change of trend, maybe look for a bit of a move up 30 to 40 pips into these ranges. But you can see here we're certainly bottoming out. Very standard non-farm payroll week behavior, especially on the day of the results. Okay, so no surprises here at all, but just be very, very mindful that the ranges are probably going to be fairly tight until tonight's New York session, and then we might see the breakout that we're looking for. Look, what we want to see here is obviously a break lower on the daily, okay? We want to see this tested. We're already trading below the previous support, so you know it's already really technically down there, but it's got a little bit more work to do to get to the 70 cent mark, and I think we've got probably 60 or 70 pips. By the time it gets down and breaks this level, we've probably got 60 or 70 pips of pretty easy trading to get down to the 70 and the very high 69s. So realistically, it's a case of scalping it in between these zones until we do get the breakout. Now, if we get a daily close below this level, so below the level of 70.60 again, that's our cue to take it short down to the 70. And of course, if it does retrace and push up above this level here, which is around that 71.80 level, and it needs to close above there, by the way, it doesn't, you wouldn't be looking for just a touch of it. It most definitely needs to close before it gets us interested. We're looking for a lightning bolt on a 4-hour at the very, very least to convince us that it's going to start going long. And even then, I'm probably only thinking it's going to go to the moving average anyway. So that's probably the target. It's the harder trade of the two, no question about that. The shorter option is very, very straightforward and can happen a hell of a lot quicker. So that's the one I would prefer. But of course, there's always two scenarios, and we would trade either if they eventuate. Okay, we'll go over to the US dollar CAD. Same deal here. You can see it hit our target this week. We hit the 128, so we're very happy with that. You know, look to look for potential longs, even further past this, it needs to do a retrace for me now. Like, we've captured nearly all of this move. We've been going really well on the US dollar CAD. I don't think we need to push our luck. We know this is a very, very strong reversal zone. It's, you know, it's obvious. It's not like we're testing here for the first time. It's tried to break through 3 times and failed every single time, quite miserably actually, on a couple of these occasions. So it doesn't surprise us that we found resistance here. Our take profit should be well and truly out. In order for this to actually go up again, what we're looking for is a pullback down to at least a 20 moving average. And that gives us a pullback of some significance, that gives us momentum to actually reverse the trend and push up. Generally speaking, when we see price pushing up against the resistance without a big momentum push, because this has been a big run, okay? So it's not like it's only just started and it's starting to push up. What we want to see now is a pullback of some significance and then give it a chance to reload, consolidate in that area, then blast through. We want to get some momentum from the lower part, and that 20 would be ideal. All right, so anywhere around that sort of 127.50 to 127 flat. The 20 moving average need to catch up a little bit, but we've still got a little bit more power. But again, no surprises that it's finding itself at a very strong level of resistance right on non-farm payroll. So one to watch, most definitely. If you want to counter and attempt to counter this one, you need to go to the smaller time frames, look for a series of lower highs and lower lows, but just be very mindful that this is still in a dead set uptrend in the bigger time frame. So any counter trend is probably going to be short-lived. Be very, very careful of that. Aim for the levels that we talked about if you are counter trending, and just be wary that eventually this trend is most likely to probably kick in and start to push up. Now, failing the move up, if it does print a series of lower highs and lower lows on a daily, then we can start looking to retrace down to the 125s again. Look, that's not the preferred trade, although it is possible. It's definitely not the preferred trade for this one, because realistically, it's going to take a lot of time to actually make that happen. We might be sitting here till Christmas waiting for a change of trend on the daily. So ideally, we probably want to see more strength, but a pullback to around this level would be ideal for certainly short-term trading. All right, we'll move over to the US dollar yen now. This has been a bit of a funny one. I think this has probably been one of the biggest victims of the scare that we had late last week. We saw a massive sell-off, and it's been basically entrenched in this channel now. It's found itself right in the middle. I'm not a big fan of trading something that's right in the middle of a channel, especially on a daily of non-farm payroll. So realistically, we've got two levels that we know we're going to trade when it gets there, but this is one of those ones where I'd prefer not to take a guess. It could absolutely go in either direction really, really easily. Although they are, a couple of hundred pips apart, I think it's difficult trading, and it could get quite messy. So if you are going to scalp this one, you want to keep the scalps very, very tight, I think. And the key levels are obviously the 114.20 and the 112. A break below the 112, and you would see this certainly selling off. But a break above the 114.20 and a daily close above that level, then you're going to start to see some good movements back up to basically what we're hoping is going to be a 117, 118 push. So, but in order to do that, of course, we're going to need to see a daily close above here. This is definitely one of those ones where I'd want to be just waiting and seeing. I wouldn't be jumping in on this one anytime soon. Okay, just keep an eye on it. Watch this. Just to sort of explain what I'm talking about, if we go to the smaller time frames, you can just see that the trading is really, really messy inside of here. Okay, even if you go to the 1 hour, you'll see the same thing. Very messy, very hard to predict. Even though you've got very clear targets to aim for, they're not very far away. So if you are going to scalp it really, really tightly to those bands until we get a significant close above one of these levels. All right, we'll move over to the dollar index now. Again, this is one of the ones that did the job perfectly for us, hit the target spot on, as you can see there. Our 96.80 target was touched, and then no surprises that it actually found the resistance where we would have believed it would be. You can see here, this is very, very strong resistance right through here, right? This is a no-joke chart. This is a weekly. You can see all the way back to 2018 that this was a very, very serious level. So you would have been a very, very brave trader to be trying to attempt to go longer on this one, especially on the first touch. So realistically, it's still good. It's been really good trading, especially the short on the euro. Fantastic trading. It's still got power, no question about that. It's got plenty of MACD power, and the momentum is still with it. But look, it's going to be one of those ones where it's really accelerated away from the 20 moving average now. In an ideal world, what we'd want to see is some consolidation between these two zones, between the 95 and the 96.80. I would like to even think that it could stay above 96. That would be ideal, but I'm not concerned anywhere in this channel. If you find a bit of a bounce here, let the 20 moving average catch up, and then it can have a big significant push up past the 96.80. That's what it's going to take to break it, short of some news that we're not expecting. So realistically, this is one of those ones where we're going to a bit of a watch and see. I mean, obviously the euro's a trade on this. We're going to go on that in a second, but it just finds itself. It touched the resistance. We're not going to complain about that. We knew that that was going to be the place where it was going to most likely stop. We should be well and truly out of those trades, and now we're really waiting just for a retracement back to some sort of support and a sign of strength again to try and break this zone. All right, we'll move straight over to the euro now, because this is obviously the trade of choice for that one. Now you can see that we've had the sell-off. It's been really, really nice, very well behaved from a technical standpoint, touching the 20s all the way down and selling off. The 112 target was hit. Hopefully all of you were able to get that. We've been talking about it for long enough. So you hopefully were able to take your profits at 112. Again, you would have to be very brave or have a very big long-range plan if you're aiming for more than the 112 on the first touch. It's not to say that it won't go lower. There's an equal chance that it probably will, really, especially if the dollar index starts to, get the momentum up again and the dollar strength increases. This could easily fall back to the 110 or even 19. So if it's going to, this is the level that we're looking at. You can see here that the 20 moving average has pulled it up. I think this is probably the trade of the day. If you want to be trading and scalping something, this is where you might see the movement, because we know we've got a very solid base at 112, and it's sitting right at 113 at the moment, right on the 20 moving average. So I would expect that it's going to be probably trapped in this zone today for the next probably 10 to 12 hours at least. And it could give you some good trading opportunities. There is a 100-point band there, so you just need to go to the smaller time frames, look for the ideal changes of trend. You've got your band set up there. Look for a series of higher highs and higher lows, or lower highs and lower lows, and that's how you would trade this one. There's no big secret here. This is the range that we're looking at. Yeah, failing that, look, it's going to be really interesting to see how the market reacts to the results tonight, because if it's a really bad reaction and the dollar strength increases and we see a daily close below the 112, we're going to probably see some big systematic selling in this one again next week. The euro could find itself really falling quickly. And of course, on the flip side, if the news is really positive and the dollar starts to weaken, the dollar strength starts to weaken, then this could have a significant shift up and start pushing back into the 114. So difficult to predict which way it's going to go next week until we actually have the breakout, but I think there's some pretty good trading in between. So just wait for the signs, wait for the lightning bolts to happen either side, and trade just inside this range until we have a breakout either above the 20 moving average, which would actually give us a lightning bolt on a daily, which will give us a signal to actually start to push long, and that would also give us an inverse head and shoulders off a very important level of support. Or, of course, if we get a daily close below the 112, then we start to look for the shorting opportunities back with retraces back to the 20 moving average. All right, we'll go over to the Aussie 200. Now, this one, again, it found support at the level that it had to. If it didn't find support here, it was going to basically be a free fall. Look, we know the news last week did this. It hasn't really it's been a volatile week. Look, this is a lot of action for a non-farm payroll week, and obviously the up and down volatility has certainly increased on the S&P 500 as well. So there's no surprises to see this. But what it does do is it makes it very difficult to trade. Okay, so when you start to see volatility like this, it's especially in a market that's closed for the most part of the volatility, you're only really operating on futures. We really have to just wait and see on this one. I just can't. I'm even at the level that it's at. Like that the bottom of that channel is 73.45, which is still the best part of 100 pips away or 80 pips away, but it's difficult to trade because it's been so damn volatile. And the problem with it is you need bigger than normal stop losses to account for that little bit of movement. I wouldn't be trusting along on this to 73.45 without a stop loss below its low, and that doesn't make the risk reward in any way, shape or form enticing. So I look at that and think to myself, I would rather just wait and see a break above 73.40, and we're going long again to the 74.80. I think that's a really easy trade, but a close below the 71.20 area, especially below this level here. We know we've got roll reversal at this point, but if we get a close below, look, I'll put a horizontal line there and we'll keep an eye on it for the next few weeks. Whoops. We'll do that. A close below the 70.80 level. It's a 70.80, not 70.88. I'll just take it up, or 70.80. There it is there. A close below this level here, and I think you're going to see a pretty big move down to the 69s again. So really pretty easy to actually pick a trade once we actually get a close above one of those key zones. I think it's very, very messy inside of here, and if you are going to trade it, you need to trade it with a lot of caution. Okay, so be really careful with this one. But a close above here, aim for the 74.80, a daily close below the 70.80, and we're aiming down to the 69 and 68.50. All right, the last one we'll have a look at is the S&P 500. Everyone always loves this one. Again, we saw the big sell-off. This has been a little bit volatile this week as well. As you can see, we've seen some very big corrections. We've seen a positive day or a positive night last night. But as you can see, though, it's had two very, very big negative days that continued on from the initial scare. It broke that key level here. It's trying to get itself above it. The close tonight is going to be a very, very important one. When I say tonight, I'm talking about tomorrow morning, actually. Of course, after non-farm payrolls is done and dusted and the New York session is actually traded, I think that a close above this level will be quite bullish for us, and I think we can start looking at longs and pushing back to the high 47, 4800s again, and a close below this level, and then I think we're going back to potentially down to the 4300 in the first instance, which is this support zone here, and then down to 4250. So again, it's one of those ones that's going to be difficult to trade throughout today, but I think we're going to get some really good clarity on it early into next week, and I think this is the one you want to watch, because if we get that close above this level here, especially if it's a positive candle that closes above all of this noise here, then I think it's a really comfortable trade back up to the 47.50 area, which is where it was pretty much touching the all-time highs. That makes for pretty easy trading if it does do that, because the momentum will definitely shift. Well, it has to shift to get it up there. That's the whole point, waiting for that momentum. But if we get a close below the this level here, so basically below 44.90, so if we're getting a close around, say, 44.80 on a daily, so if that's where it closes tomorrow, New York, wow, then it's going to really open itself down to the short. And I think either trade is good. I don't have any bias whatsoever on this one, because I think it's found itself in a zone where it's pulled back enough to test those highs again comfortably, but it's also got itself in a position where if it can't hold up here throughout the big news event, then it's probably going to be selling off down to that very key level. So there could be 150 points on the way down. So two easy trades. Either way, it closes, but I think you have to wait for that one to play out. And then I think next week we're going to see some good trading on it. So keep an eye on it and set your alerts, and yeah, definitely check in on Monday to see which way it played the game. And let's hope it's not exactly where it's at right now, because that would mean a probably messy start to the week. All right, so I hope everybody's had a great week's trading. I think we've had really good opportunities, and I think next week opens itself up with key levels all being tested right now. I think it really opens up next week for some good trading opportunities once these levels get broken. So have a great weekend, everyone. I look forward to seeing you all next week.